Hello everybody, welcome back. I'm going to do another video. I think I stopped at the C's of pretty much cryptocurrency words, definitions, and terminology. We're not going to do it on watching me read it off, even though I know you want to see this sexy face. We're going to go off the screen so you can kind of see what I'm looking at. See, let's start off with the D's. DAO, Digital Decentralized Autonomous Organization, also known as a Digital Decentralized Autonomous Organization, abbreviation DAO, or some people might call it DAO or DOE or whatever they want to call it. Alternatively, the first known example of a DAO was named the DAO. The DAO served as a form of investor-directed venture capital fund which sought to provide enterprises with new decentralized business models, Ethereum-based. The DAO's code was open source. The organization set the record for the most crowd-funded project in 2016. However, those funds were partially stolen by hackers. The hack caused an Ethereum hard fork, which led to the creation of Ethereum Classic. So, remember, there's two Ethereums, Ethereum Classic and Ethereum. Decentralization. What that means is the transfer of authority and responsibility from a centralized organization, government, or party to a distributed network. So basically, any social media platform has a centralized server, which is the government, or it has the main hub of in the background. Decentralized application, DAPP, DApp or DApp. They all say it different. Heard a couple pronunciations. An open source software application with a back-end code running a decentralized peer-to-peer network rather than a centralized server. So when I set up here, we know how social medias have that main server. Coders, they make dApps where it runs peer-to-peer. There is no main hub or building that it goes to, I guess you would say. Decentralized finance, DeFi. You see the DeFi, that's what that means. Decentralized finance, often called DeFi or open finance, refers to the economic paradigm shift enabled by decentralized technology, particularly blockchain networks. DeFi represents a shift from a centralized and closed financial system to a universal, accessible economy that is based on open protocols that are interoperable, programmable, and composable. Deposit. I'm pretty sure everybody knows what a deposit is, but I'll go over it. Digital property put into a contract involving a different party such that if certain conditions are not satisfied, that property is automatically forfeited to the identified counterparty. Digital asset. A digital commodity that is scarce, electronically transferable, and intangible with a market value. Digital identity. An online or network identity adopted by an individual, organization, or electronic device. The digital signature, a code generated by public key encryption and attached to an electronically transmitted document in order to verify the contents of the document. A distributed denial of service, DDoS attack, a type of cyber attack in which perpetrator continuously overwhelms the system with requests in order to prevent service of a legitimate request. So basically, it just overwhelms the server with fake requests, so real transactions or whatever it may be can't actually get through, and it just clogs up the network. Distributed ledger, a type of database which spreads across multiple sites, countries, and institutions. Records are stored sequentially in a continuous ledger. Distributed ledger data can be either permissioned or unpermissioned to control who can view it. Difficulty. We'll go over this one too, which I'm pretty sure everybody knows what that means. The concept outlining how hard it is to verify blocks in a blockchain network during proof of work mining. Remember, I said earlier there's two of them, well, three, but the two, proof of stake and proof of work. Proof of work is mining, proof of stake, staking. In the Bitcoin, so proof of work mining in the Bitcoin network, the difficulty of mining adjusts alters blocks every 2016 blocks. This is to keep block verification time at 10 minutes. I believe they are talking about Bitcoin. Double spend, the event during which someone in the Bitcoin network tries to send a specific Bitcoin transaction to different types of recipients at once. However, each Bitcoin transaction is confirmed, it becomes almost impossible to double spend it. The more confirmation that a particular transaction has, the decreased likelihood of double spending the Bitcoin from the transaction. Start with the E's. Enterprise Ethereum Alliance, EEA for the abbreviation. A group of Ethereum core developers, startups, and large companies working together to commercialize and use Ethereum for different business applications. So basically building dApps, what I mentioned up above. The EIP, Ethereum Improvement Proposals. The Ethereum Improvement Proposals, EIPs for abbreviation, describe standards for the Ethereum platform, including core protocol specification, client APIs, and contract standards. Encryption, a process used to combine a document, plain text, with a shorter string of data referred to as a key. In order to produce an output, ciphertext, this output can be decrypted back into the original plain text by someone else who has the key. The ERC20 token standard. The ERC is an abbreviation for Ethereum Request for Comment and followed by the assignment number of the standard. The ERC20 token is a technical standard for smart contracts. The majority of Ethereum token follows. The list of rules state the requirements that a token must fulfill to be compliant and function with the Ethereum network. And then there is a ERC 721 token, a non-fungible Ethereum token standard. This token standard is used to represent a unique digital asset that is not interchangeable. And I'll go up here, and I brought it up for you guys earlier. Give you a little bit more of that ERC 721 token. The ERC 721 tokens, more commonly referred to as a non-fungible token, abbreviation NFT, have captured a lot of developer mindshare since the interface was first published in an EIP as an EIP in September of 2017. Non-fungible tokens allow developers to tokenize ownership of any arbitrary data, drastically increasing the design of what can be represented as a token or on the Ethereum blockchain. The biggest differentiator of a non-fungible token is that each one is tied to a different identifier, making each token unique to its owner. This is much different to tokens leveraging the ERC20 token standard, which is a token for fungible tokens, meaning each token is interchangeable in the ERC20 token standard. Developers can create any numbers of tokens with one contract, but in the ER721 token standard, each token with the contract holds a different value. ERC 721 is a standard interface for non-fungible tokens, meaning ERC 721 tokens are simply a subset of Ethereum tokens. Go down to Ether, ETH. Ether is a native currency of the Ethereum blockchain network. Ether, also referred to as ETH, functions as a fuel of the Ethereum ecosystem by acting as a medium or of incentive and form of payment for network participants to execute essential operations. Ethereum, a public blockchain network and decentralized software platform upon which developers build and run applications. The EVM, Ethereum Virtual Machine. The Ethereum Virtual Machine EVM is Turing complete and allows anyone, anywhere to execute arbitrary EVM bytecode. All Ethereum nodes run on the EVM. The project is designed to prevent denial of service attack, DDoS attack, what we had up there earlier in the Ds. It is home to smart contracts based on the Ethereum blockchain. Exchange, a place to trade cryptocurrency. Centralized exchanges operate by companies like Coinbase, Gemini, functions as intermediaries while decentralized exchanges do not have a central authority. So there's two kind of exchanges. Basically, the centralized is pretty much Coinbase, Gemini, Binance. They go through a main server or main person or main business, and that's how you exchange your cryptocurrency. A decentralized exchange, which would be called a DEX, DEX, and I brought something up here for kind of what that is too. It's just basically peer-to-peer trading. So a decentralized exchange is an exchange market that does not rely on a third-party service to hold the customer's fund. Instead, trade occurs directly between users peer-to-peer through an automated process, such as a system can be established by creating proxy tokens, crypto assets that represent a certain fiat or cryptocurrencies, or assets that can be represent shares in a company, for example, or through a decentralized multi-signature escrow system. Among other solutions, this system contrasts with the centralized model in which users deposit their funds and the exchange issues an IOU that can be freely traded on the platform. When a user asks to withdraw his funds, these are converted back into the cryptocurrency they represent and sent to their owner. See, so basically, if you like the Kyber network, you look up on Google Decentralized Exchange and you'll have a bunch of them, and then you can trade them into their exchange tokens, trade, and then convert them back out to the actual coin that you wanted, and then send it back to your wallet. So the benefits of a DEX, decentralized exchange. The most obvious benefit to using a decentralized exchange over a centralized one is their trustless nature. You are not required to trust the security or honesty of the exchange, since the funds are held by you in your personal wallet and not by a third party. Another advantage of the decentralized model is the privacy it provides. Users are not required to disclose their personal details to anyone, except if the exchange method involves bank transfers, in which case your identity is revealed only to the person that is selling or buying from you. Furthermore, the hosting of the decentralized exchange is distributed throughout the nodes involved, meaning that there is no risk of server downtime. So a list of decentralized exchanges, pull this up for you guys. There's 1inch dot exchange, AirSwap, Atomics, Balancer. I read something on the news with Balancer about, I don't know, you'll have to look it up. It's about a hack or something, but they made it good. They refunded anybody that was infected. Bamboo Relay, Bancore, Bisq, Curve, Dex.ag, DDEX, Diversify, Dex.blue, Dolomite, Fairdex, Fort Delta, IDEX, JellySwap, KyberSwap, and there's just a bunch of them that you can go through. They all have Ethereum, Bitcoin. You know, you have to run through them, see what they have. I'll let you guys take a look at all these. Now they have an aggregator, which I use quite a bit actually. It's a coin switch. You don't even have to sign up. It's basically you put in your wallet address, you take the coin that you want to trade, you put that address in there, send it to CoinSwitch, get the crypto asset or digital altcoin that you would like, transfer it, and then you'll get that altcoin wallet that you have on your computer or wherever you want to put it. You put that address in, and then it converts it for you and sends it to your wallet. It takes about 4 or 5 minutes to go through it all because CoinSwitch is going off, you know, 3 or 4 major exchanges, and it's trying to find the best deal for you, and that's how they do it. And you don't even have to sign up for it. So that's pretty cool. I like that. It's real quick for the most part. You don't even have to sign in and all that stuff. F's. Fiat currency. Government issued currency, for example, the US dollar, euros, won, yen. That's pretty much real money, government money. A fork. A fork creates an alternative version of a blockchain and are often enacted intentionally to apply upgrades to a network. Soft forks render two chains with some compatibility, while hard forks create a new version of the blockchain that must be adopted to continue participation in the instance of a continuous hard fork. This can create two versions of a blockchain network. For example, Bitcoin Cash, those are forks. They run off the same network, basically, just have different upgrades. That's all for the F's, huh? There's a lot more F's, I'm pretty sure. But okay, we'll get back to that. G's, gas, a measure of computational steps required for a transaction on the Ethereum network. That then equates to a fee for network users paid in small units of ETH. I murdered that one. Yep. Well, you go ahead and read that. Genesis block, the initial block of data computed in the history of a blockchain network. Remember, I think it was in the B's. It's first block. It's Genesis block would be block 0. That's the first block it ever mined or did whatever it had to do for computers. The GWEI, I was hoping I didn't have to see this word again, but here we are. A minuscule and common denomination of ETH, and the unit in which gas prices are often specific. I can't even say that one. So we're going to, hopefully there's not that word in the S's. Hash. A function that takes an input and then outputs an alphanumeric string known as the hash value, or digital fingerprint. Each block in the blockchain contains the hash value that validated the transaction before it, followed by its own hash value. Hashes confirm transactions on the blockchain. Halvings. Many cryptocurrencies like Bitcoin have a finite supply, which makes them scarce digital commodity. The total amount of Bitcoin that will ever be issued is 21 million. The number of Bitcoins generated per block is decreased 50% every 4 years. So, you know, they had that halving on Bitcoin just a few months ago. I think it was 12.5. I think I said this in the last video, but it was 12.5, and then it just pretty much halved itself this last few months, making it harder to mine, I guess. You don't get a bigger reward. This is called halving. The final halving will take place in the year 2140. So it's a lot of halvings. I won't be here for that. Doubt you will either. Hard fork. A hard fork occurs when there's an exchange in the block, or when there is a change in the blockchain that is not backwards compatible, not compatible with older versions. Thus, requiring all participants to upgrade to the new version in order to be able to continue participating on the network. So if you had a coin of, say, XYZ, and XYZ wanted to be XZZ, you would have to convert all those XYZ coins to XZZ coins to participate in that. Your hardware wallet. A physical device like the famed Ledger wallet. I have that actually. Like the famed Ledger wallet that can be connected to the web and interact with online exchanges, but also be used as cold storage, not connected to the internet. They have a couple of them. Actually, they have a few of them. Two biggest ones is Ledger and Trezor. Both good. I have one. I suggest them. And by the way, if I come by any financial advice, I am not a financial advisor. Do your own research. Do not take my advice on financial picks or cryptocurrency. This is what I think. So what I like. Later on in the videos, I might give, attention to the coins that I am invested in. But by all means, do your own research. I am not a financial advisor. So that's a hardware wallet. It's just you can be used online and connect and be disconnected for cold storage. That's what I use. I use a desktop wallet as well. Hot wallet or hard storage, a wallet that is directly connected to the internet at all times. For example, one that is held on the Centralized Exchange. Hot wallets are considered to have lower security than cold storage systems or hardware wallet. So basically, a Coinbase wallet, if you keep your crypto on an exchange, I advise against it. I wouldn't do it. But that's you. Some people say it's safe. There have been exchanges that have been hacked, and you could be a target and lose your crypto, and I don't think any of them are insured for now. So just get you a wallet, and be safe. Get you a little desktop wallet, on your you can download and put it in there. That's even safer. So a hybrid consensus model, POS, POW. So this is that proof of stake, proof of work. A hybrid consensus model that utilizes a combination of proof of stake and proof of work, POW consensus. A proof of work, POW consensus. Using the hybrid consensus mechanism, blocks are validated from not only miners but also voter stakeholders. So that would be the POS, to form a balanced network governance. So I think we'll stop there for today. We went through the H's. Let's see, the G's, the F's, only two for the F's, the E's, and the D's. You can get this at the consensys.net and see more on like the ERC 720 tokens, 721. You can go to education.district0x.io and you can see the Decentralized Exchanges at defiprime.com, and you can look at all of them, see what tokens they take, what do they trade, see their benefits of them. That's all for now. If you guys like the channel, hit the like and subscribe. I'll be making more of these. We'll be going through all the glossary again next time. You guys have a good day.